barrels per day.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.
Hello guys, it's Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the Nasdaq, not the Nasdaq 100, the gold market, And just before I start today's video, anyone who is interested in joining my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I charge a very small fee of $29.99, and you can find this website link in the description of today's video. But let's talk about the gold markets. Gold exploded to finish off the week here on Friday, and we've actually had a weekly close up at around 1870, which is probably the highest that we've been trading for now for some time. Of course, about a week ago we did go and hit at 1870, but prior to that it takes us all the way back to the 9th of May. So a very strong move towards the upside here in gold. In fact, we saw an incredible amount of volatility. If I just take you onto the hour chart, you'll see this knee-jerk reaction here for the gold markets, where we just basically sunk and then completely rallied off those lows. So why has this happened? Well, on Thursday, I basically come onto YouTube and I said, if the CPI reading is worse than expected, meaning it will be higher, inflation's higher than analysts expect, then you can expect to see gold fall. And reason being is because it basically opens up the door for the Fed becoming more hawkish. Already banks come out yesterday and said that, a 0.5% rate hike in September is definitely on the cards. A lot of banks went from 0.25 up to 0.5. There's even some banks like Citibank, for example, which are now anticipating for a 0.75% rate hike for the next meeting. That's for next month instead of 0.5. So you can see how much more hawkish analysts are expecting the Fed to become, and of course that is a negative for gold. But what has made gold turn positive during the trading session is now that there are real big worries that the Fed aren't going to be able to offer a soft landing, and that we will in fact go into a recession. So I think fear has come into the market. We've seen the stock market sell off heavily, and normally we have a very good correlation between gold and the stock market, but not yesterday. We saw assets in the stock market being sold off and gold being purchased, and that means that investors are worried. They're going for safety, hence that's why gold is one of the biggest safety havens. But that being said, we still struggle to break above the 0.5 Fibonacci area, and we still haven't had that daily close above the 50. So gold is still technically in a downtrend at this moment in time. I still don't like it. I think eventually, even if you were to break above the 50-day EMA and go and trade up towards that 0.61 fib area up around 1920, I still think that we've got so many hurdles. You've got this downtrend line, for example, that's obviously going to offer a significant amount of resistance. So I don't like gold. It's had a little rally during today's trading session, but ultimately I think it does break down once the Fed becomes much more hawkish.
190 to 166.
There's Apple's under pressure.
You buy stocks on Tuesday and sell them on Friday.
Market is as volatile as you'll ever see.
Traders saying this is the craziest day they have ever seen in these markets. Veteran traders saying they've never seen anything like it. The movement in oil.